Last 3 years, I am now coming to the more recent period, we have utilized the flexibility in monetary policy framework to calibrate our actions to counter the adverse effects of the COVID-19 pandemic, the war in Ukraine, and several other challenges which we encountered because of synchronized monetary policy tightening in almost every advanced country. During COVID-19 pandemic, our monetary policy committee reacted swiftly by reducing the policy repo rate by 115 basis points in a span of just 2 months. Along with rate cut, we infused significant quantum of liquidity through both conventional and unconventional measures to stimulate the economy, restore confidence and revive market activity, while ensuring that our liquidity augmenting measures did not engender future fragilities. One thing which we did differently from most of the other countries was that whenever we injected liquidity into the system, most of the liquidity injection were done for finite periods. We said that this liquidity we are giving for 1 year, this liquidity we are giving for 3 years, and the period was specified. There was a sunset which was announced while announcing the measure. The other thing we did is that all our liquidity infusion, almost every bit of it, was targeted. It was targeted and the banks were used as the intermediaries. So it was targeted at small NBFCs, it was targeted at the MSME sector through the SIDBI, it was targeted at the rural sector through the NABARD. So every liquidity infusion that we did, almost all of it was targeted, and it was for finite periods. So therefore the difficulty which many advanced countries faced when they had to withdraw the liquidity after the pandemic was over, and then it became a bigger problem for them than what it was for India, because in India, when we gave liquidity right from day one, the banks and other institutions to whom liquidity was given, they precisely knew that they have to return that money to reserve in 3 years or in 1 year. So that helped the banks to plan their actions and plan their activities. So this is a major difference, and I think as a result of which, in terms of sucking out the excess liquidity, because excess liquidity can be and is, will definitely undermine will pose a lot of systemic risks. So therefore, many countries have found it difficult, and they are still grappling with that problem. You had the case of United States, where they had embarked upon a liquidity withdrawal. But then you had the banking crisis in the early part of this year, in February and March, the banking sector crisis in the US. So the US Fed had to again inject liquidity because the situation demanded that. So whatever liquidity they had withdrawn, almost a lot of it was again put back in the system. So therefore, when you have this kind of uncertainties coming up, it's always desirable to announce a preset date. And in any case, you announce, let's say, 1 year, or you announce 3 years. Down the road, when you are completing 3 years, it's always open to you if you want to extend it. So therefore, that will be like you are giving, even from a practical point of view also, both for the Reserve Bank as well as for the banks, it's an easier situation to deal with. If you have to extend the period due to certain exigencies, like the US Fed faced in the case of the banking crisis in the US, then you have always the option of extending it by 6 months or extending it by 1 year. But if you haven't announced any date right from the beginning, then the decision as to when you will withdraw becomes a big challenge, and any time you withdraw that liquidity, it causes some amount of stress for the banking sector. Now, recognizing the need for strengthening financial stability, the Reserve Bank has taken a number of initiatives to revamp the regulation and supervision of the banks, NBFCs and other financial entities by developing an integrated and harmonized architecture. The supervisory approach is now geared to effectively address the root cause of vulnerabilities and identifying any buildup of potential risks. We engage regularly with all regulated entities to identify incipient signs of stress and deal with them at an early stage. We have been focusing on constantly improving governance and the functions of compliance, risk management and audit in banks and other financial institutions. The Reserve Bank is leveraging on data analytics and carrying out periodic off-site analysis to provide sharper analytical inputs to its on-site supervisory teams. An early warning framework has also been developed. A new SupTech initiative, that is for supervision, with the name Daksh has been launched. A college of supervisors has been set up to upgrade the supervisory skills of the regulatory and supervisory personnel. Recently, we launched a centralized information management system, or SIMS, which is our next generation data warehouse. Similarly, digital payment security control guidelines have also been issued, and we were perhaps one of the first central banks, among the few central banks, who have issued regulatory guidelines for digital lending. And several other initiatives have been taken, so I am not going into each of them, so I am leaving it, those of you who are interested, a copy of the speech will be uploaded in the website of the Reserve Bank, so you may have a look at it, and I can perhaps see many students sitting in the balcony, so you can access it from the website of the Reserve Bank. While pursuing all these reforms, the Reserve Bank has also made conscious efforts to improve systemic resilience and efficiency by maintaining external stability and building forex reserves. Now, on the matter of building forex reserves, the conventional approach has been that, well, it's a market function, and the central banks traditionally has been, it has been seen that the central bank should not consciously try to build reserves because it is anti-market, because you are mopping up foreign exchange, and therefore it is anti-market, and therefore it should not be done. Even the International Monetary Fund or some of the advanced country economists were about 10 years ago or 7 or 8 years ago, they were frowning upon this idea. But now the thinking has changed. In Reserve Bank of India, I remember in sometime in March or April of 2019, in IMF in a meeting, I took the position that central banks in emerging market economies, in EMEs, have to build forex reserves. When there is a current account deficit, when there is a current account payment BOP crisis, where will these central banks of emerging market economies go? You don't expect EME, a country of India's size or a large economy, every time they have a BOP crisis to rush to the IMF, because rushing to the IMF is associated with certain stigma, rightly or wrongly is another issue. So therefore, eventually in today's globalized world, every country has to look after its own interest. So our official position we announced is that we will build adequate forex reserves, because a BOP crisis can come at any time. When there are inflows, there could be outflows also. It is all a cycle. You have huge inflows and you don't do anything. You just watch that currency to come in, resulting in rupee appreciation. And we have nothing to say on rupee appreciation or depreciation. Let me clarify very clearly. Some of my media friends are present here, so don't read it the other way. I mean, the rupee, exchange rate of the rupee is a function of the market. We have no specific target about the exchange rate. What should be the rupees exchange rate, whether it should be 82 rupees or 83 rupees or 81 rupees. We have no specific target. But our objective, we announced some 4 or 5 years ago, we were quite open about it, that we want to build up reserves, because when the cycle turns and when there are outflows, it is your reserves which will come to your rescue. And take it from me, last year when the Ukraine war started, there were heavy outflows from many countries, including India, particularly emerging market economies. But the fact that we had reserves of 600 billion plus gave lot of confidence to the market, particularly to the international investors, that India will be able to honor its commitment, and therefore the pressure on the Indian rupee was not as much as the pressure on many other currencies. And even at that time, the fact that we had 600 billion plus reserves helped us to maintain an orderly depreciation of the Indian rupee. It was not as if overnight the rupee crashed from 73 to 80 rupees or something like that. It was a kind of an orderly evolution which we ensured. And at that time there were sort of apprehensions expressed, quite rightly, apprehensions expressed that perhaps the RBI was, being too aggressive, and in fact I read somewhere that the Reserve Bank was perhaps splurging foreign exchange. Our position was very clear. You buy an umbrella to use when it rains. And it was raining, and raining very badly immediately after the war commenced in Europe, because capital was flowing out almost from every emerging economy. So what do you do with 600 billion forex reserves if you do not use it to ensure an orderly depreciation of the Indian rupee? So you bought an umbrella, you cannot just keep it saying that the umbrella will get little damaged. The umbrella has to be used when it is necessary, and I am happy to point out, and I have said it earlier also, that the umbrella continues to be strong even today. We crossed $600 billion reserves some time ago, but because of revaluation, sometimes it comes below 600, sometimes it goes above 600, but it is broadly around $600 billion. Now, thanks to various initiatives which the Reserve Bank has taken over the last few years, and it's not as if we did everything in the last 3 or 4 or 5 years. I am focusing on my tenure because I am directly associated with that. Reserve Bank over a period of time has been carrying out number of changes, number of policy initiatives. So whatever we have done in the last 4 years, last 4.5, 5 years, should be seen as a part of a continuum of steps taken by the Reserve Bank in the interest of the economy and the interest of our country. Now, thanks to these and several other initiatives by the Reserve Bank, the banks themselves and other financial entities, India's financial sector today remains resilient and healthy. There is, however, no room for complacency. New challenges and stress points keep coming up, and all stakeholders have to be cognizant of the emerging developments and associated risks. Now, against this backdrop, and also as a backdrop to the building blocks for a future growth, let me turn briefly to the current macroeconomic scenario, starting with the global environment. The global landscape is witnessing major structural changes. The process of globalization has slowed down and is drifting from multilateralism to bilateralism and to geo-economic fragmentation. Friendshoring and reshoring have become more pronounced. Global supply chains have been under pressure, which, along with rising global commodity prices, contributed to multi-decadal high inflation in 2022. The resultant aggressive monetary policy tightening has dampened the global growth outlook. Tight financial conditions and volatile capital flows are accentuating the impact of the global slowdown on the prospects of the emerging and developing economies. Headline inflation is now easing unevenly across countries, but remains above the target in the major economies. The pace of monetary tightening has been scaled down, but policy rates could stay higher for longer. And this can happen in several countries. I'm not referring to India now, I'm referring to several countries. On India also, I have said this in my monetary policy statement, that as things look, we are perhaps looking at a situation where it could be, the policy rates could remain high for long, but I'm not giving any indication as to what we will do in the next monetary policy, which is of course more than a month away, because it all ultimately depends on incoming data and what they suggest for the future. Even as the grim prospects of hard landing have receded, I'm talking global, global growth is likely to remain low by historical standards in the medium term. With increasing climate change risks, the development of climate-friendly technology, new and renewable sources of energy, and sustainable agricultural practices would shape our future. The pace of progress in all these fronts need to be hastened. Amidst such volatile world environment, India stands out as the emerging growth engine for the world. India's real gross domestic product recorded a growth of 7.2% last year, surpassing its pre-pandemic level, that is the level of 1920 level, by 10.1%. Overall, the conditions are favorable now for the growth momentum to continue and the capex cycle to gain momentum in 23-24. Opportunities are now promising and can be utilized to propel our economy to a higher growth trajectory. The challenge of high inflation, however, still persists and has to be effectively addressed. After reaching a low of 4.3% in May 2023, headline inflation has risen to 7.4% in July, driven by surge in tomato and other vegetable prices. The July print, which was released after the monetary policy meeting on 10th August, was on the higher side compared to the earlier estimates. Prices of vegetables surged by 37.3% year-on-year, led by an increase of more than 200% in tomato prices. Reflecting these drivers, the food group inflation more than doubled from 4.7% in June to 10.6% in July. On the positive side, inflation excluding food and fuel, or what is called core inflation, that softened by around 130 basis points from its recent peak in January. Although it is still elevated, that is, although core inflation is still elevated at 4.9%, this steady easing of core inflation over the last 5 months is indicative of the ongoing transmission of monetary policy. Looking ahead, the spike in vegetable prices in July is starting to see a correction, led by tomato prices. New arrivals of tomatoes in mandis are already softening the prices, coupled with proactive supply management in the case of onions. We expect to see an appreciable slowdown in vegetable inflation from September. Meanwhile, the prospects for Kharif crops have improved thanks to the progress of the monsoon in July, although the cumulative rainfall has again moved into the deficit territory, and its deficit of about 7% as of 21st August, that is as of a day before. Meanwhile, the prospects of, the outlook for cereal prices has accordingly brightened, supported by active supply side interventions. Sudden weather events, El Nino conditions, and renewed geopolitical tensions, however, impart uncertainty to the food price outlook. As I noted in my monetary policy statement on 10th August, given the likely short-term nature of vegetable price shocks, monetary policy can wait and await the dissipation of the first-round effects of such shocks that may produce short-lived spikes in headline inflation. For the benefit of my media friends, I will read this sentence once again. Given the likely short-term nature of vegetable price shocks, monetary policy can await the dissipation of the first-round effects of such shocks that may produce short-lived spikes in headline inflation. We will remain on guard to ensure that second-order effects in the form of generalization and persistence are not allowed to take hold. The frequent incidences of recurring food price shocks pose a risk to anchoring of inflation expectations, which has been underway since September 2022. We will remain watchful of this also. The role of continued and timely supply-side interventions assumes criticality in limiting the severity and duration of such shocks. In these circumstances, it is necessary to be watchful of any risk to price stability and act appropriately and act in time. We remain firmly focused on aligning inflation to the target of 4%. Now, I highlighted the role of a central bank because in a country like India, the central bank has an important role for a sustainable growth. I also highlighted on the price stability aspect in the context of the macroeconomic situation because, as I mentioned, price stability is very crucial for any sustainable future, for any sustainable growth. Now, having provided a snapshot of the current context, that is at the global level and also in the Indian context, I would now like to turn to certain thrust areas that can propel India forward over the next 25 years. The potential is huge for India to raise its growth trajectory and improve the general well-being of the people. In this context, I would like to focus on 6 key areas that can provide the required growth momentum. These 6 areas are agriculture, manufacturing, services, demography, technology, and startups. In all these areas, India already has certain comparative advantages which should continue to be exploited to push our growth frontiers further. Let me now touch upon these areas one by one, and I will try and be brief. Let me take up first agriculture. Now, despite having 2.4% of the world land area, India is among the top 5 agri producers globally. Indian agriculture epitomizes enormous diversity with wide-ranging agroecological areas. India is not only self-sufficient in food production, but is also net exporter of food grains. Nevertheless, the agriculture sector in India faces challenges of productivity gaps, shifting preferences, and sudden weather events. All these require heavy investments in infrastructure and innovation to modernize the sector and realize its true potential in terms of achieving higher productivity, providing more efficient access to market, and maximizing farmers' income. As a nation, we must find a way of carrying out the much needed agricultural reforms, especially in the area of agricultural marketing and the connected value chains. These reforms are critical not only for sustaining high growth, but also for farmers' income, durable price stability, and to mitigate the frequency and intensity of food price shocks that we have seen in recent months. Policies towards setting up and improving cold chains and storage facilities, mega food parks, food processing units are steps in the right direction to reduce wastage and improve value addition in the agricultural sector. Turning to manufacturing, which is the second area I wish to touch upon, the manufacturing sector plays a very important role in economic growth due to its specific characteristics like economies of scale, backward and forward linkages, and integration to global supply chain. Manufacturing is also one of the largest consumers of services, making the two sectors complementary to each other, that is, manufacturing and services being complementary to each other. Contrary to the conventional growth paradigm in which an economy transitions from agriculture to manufacturing and then to services, India has directly leapfrogged from an agrarian to a service-led economy. As a result, the share of the manufacturing sector in gross value added, that is GVA, has remained stagnant at around 18 to 19%. In this changing landscape of the manufacturing sector, India has the potential to capitalize on emerging areas such as aerospace, defense, low carbon technologies, electric vehicles, and semiconductors. India has initiated reforms to build manufacturing prowess in emerging areas, including electric vehicles and advancements in lithium recycling capabilities. In this regard, ongoing mining reforms to sustainably exploit available mineral resources in the country need to be fast-tracked. Overall, it is vital to adopt a holistic approach to improve infrastructure, technological adoption, training and skilling of the workforce, and digital advancements. The fact that today India is on the moon, it will give a huge boost to space technology and in the related areas. So this is the kind of development which India is now witnessing. Silently, quietly, a lot of things are happening, and the mainstreaming of these kind of initiatives over a period of time is what will bring in investments, is what is expected to bring in new jobs to the economy. Now there are various service industries, etc., tourism, education, etc., which I am not touching upon. I would like to be brief and the India's business, but one thing which I would like to mention is with regard to the I think services I must touch upon. So I have touched upon manufacturing. Services I thought I will skip, but I think that's very important. Let me just be very brief and touch upon it. Now, India's emergence as one of the fastest growing economies in recent decades is largely attributed to the rapid growth of its services sector. The contribution of services to gross domestic product, that is GDP, has been more than 60% in 2014-15. And this has been so since 2014-15. India emerged as the 7th largest service exporter globally in 2022, up from 21st position in 2001. So we were 21st in 2001, and last year we reached the status of being the 7th largest services exporter globally. India has played a leading role in establishing global service networks and has become a global hub for information technology and business process outsourcing, that is BPO services. Newer opportunities have been harnessed to improve India's participation and competitiveness in global value chains. Now, India's services exports are growing rapidly owing to its status as the preferred destination to set up global capability centers, that is GCC by multinationals. The development and provision of services such as internet infrastructure, cloud computing and data analytics are vital in supporting the digital transformation and growth of various industries. India is well positioned to leverage these opportunities and cater to more skilled incentive and increasingly digitalized services. With regard to demography, which is the fourth area I wanted to highlight, I would like to say that India accounts for around 67% of global working age population and is expected to add another 183 million people to the working age over the next 3 decades. The median age for India is expected to be little over 30 by the year 2030. Given this demographic advantage, India would be a significant source of human capital amidst anticipated shortage of labor, and also India has the advantage of being a thriving market capable of adapting to evolving demands for goods and services. This can lead to improved growth differential in favor of India and increase India's relative size in the global economy. The evolving demographic profile is also expected to lead to a substantial increase in the quantum as well as quality of remittances. Over the years, there has been gradual structural shift in Indian migrants' key destinations from largely low-skilled and informal employment in the Gulf countries to a dominant share of the high-skilled jobs in high-income countries. Inward remittances have scaled record peaks to reach $12.5 billion in the last financial year 2022-23, and they accounted for around 3% of the GDP. Going forward, labor market transformations driven by technological breakthroughs, energy transition, geoeconomics are going to be significant forces to offer cross-border benefits to India from its migrant population. Improving the labor force participation rate, especially of women, is critical to realize our full potential. There is a need to invest in education, skill development and healthcare to capitalize on our demographic advantage. Continued and greater focus on innovation and social sector infrastructure could increase labor productivity. India's potential growth and per capita income can also increase depending on steps which are being taken in these areas. Coming to technology, which is the fifth area I wanted to mention, with the world on the cusp of a technological revolution, the time is now opportune for India to establish itself as a digital economic powerhouse. Technological advancements have not only enabled virtual education, remote work and contactless sales during the pandemic years, but also aided efficient public delivery and acted as a positive shock to overall productivity growth. Now, talking about technology, in the Reserve Bank, we have been taking number of initiatives. The initiatives with regard to the UPI and the payment systems are well known. One initiative which we launched a few months ago, and again, as a follow-up to that, another initiative where we have launched a pilot project on 17th of August relates to having a technology platform for frictionless credit. What we did initially in the first pilot project was that for small ticket agricultural loans, the Kisan credit card loans, small ticket agricultural loans, the entire process has now been digitized. The pilot project is already operational in a few states, like about 5 to 6 states, like Madhya Pradesh, Tamil Nadu, Uttar Pradesh, Maharashtra, Gujarat and Karnataka. The entire process is digitized end to end. The farmer has the choice of using his mobile phone himself, or he can go by the assisted mode. Assisted mode means where an official of the bank or a banking correspondent who visits the village sits with the farmer and assists him to fill up the loan application in the mobile or in the iPad, because these days in villages also iPad are not uncommon. So the steps are very few. In the mobile phone, he has to just fill up his name, his his land details, village, and the land details, meaning the survey number, the field number, etc. And he has to sort of say what is his crop he proposes to cultivate, how much loan he requires. So certain basic details will have to be filled up, including his Aadhaar number. In a matter of about 7 to 8 minutes, the entire loan application gets processed, because all the sort of connected infrastructure which is required for processing of a loan application are all hooked up to the platform. Whether it is his credit score, or it is the condition of his land through satellite data, or the verification of his land title, because the portal is also linked, the platform is also linked to the land record, digitized land record system of the state government. All the information flows in online automatically, and the loan is processed by the bank, the machine processes it, the loan gets sanctioned, and not only it gets sanctioned, the loan amount also gets credited to his bank account, and he gets a message in his mobile phone, an SMS saying that rupees so much has been credited to your account. Now, we did this in the agriculture sector. I thought it was a very big initiative, but somehow I think the media gets more enamored by, and everybody gets more enamored by, when we talk big things like monetary policy, inflation, momentum, all that kind of thing. But I think it is initiatives like this which are going to be the real game changers. I remember in 2016, in 2016 when the UPI was launched, not much was written about it. And in government, I was in the government that time, UPI was launched. We were also very hopeful, very optimistic. But at the same time, we had, we were also sort of quite, we had mixed feelings, how it is going to pick up. That was 2016 September when UPI was launched. Today, the per day transactions, the per day number of transactions on UPI is 31 crores. 31 crore transactions are taking place every day on the UPI. And because of that, we are in constant discussion with the NPCI. The NPCI has also augmented its system. There are backup facilities. There are, the entire system capability has been substantially scaled up, and it can handle even 3 times, 4 times of what is being handled today. But it's a continuous process, and our advice to NPCI, and that is what the National Payment Corporation of India is doing, is that they have to be, several steps ahead of the market. In other words, there has to be additional space, there has to be additional system capacity to accommodate these kind of payments. So, for example, recently I was in Gandhinagar when the finance ministers and the central bank governors G20 meeting was held. That was the last month in July. Now, we had put up from Reserve Bank an innovation pavilion. I myself witnessed the processing and sanction of a loan to a milk producer. And we had brought, because there were a lot of ministers from other countries, there were central bank governors who visited our pavilion, and many of them were very impressed. Now, in this case, there was this milk producer, and we had brought farmers from the nearby areas just to show how the loan processing is being done, how is the experience, to demonstrate live cases. So this milk producer, he came from, he was from one of the nearby villages, and he could speak only in the local language, that is Gujarati. He could not even speak Hindi. Now, there was somebody, of course, interpreting it, and he was using the assisted mode. So there was a bank representative who was sitting there, and who was doing, he asked him, what's your name? And we were I took note of the time on my watch. Okay, we started at this time. And he asked his name, his village, his land details, and his Aadhaar number. He filled in the data. He said, ki aapko kya chahiye? No, in Gujarati, aapko kya chahiye? He said, ki I want loan to buy 3 cows. So he put cow. He said, which variety cow? So the system offered, on the screen, the system offered all the varieties of cows, whether you want to buy this. So he was told, ki dekhiye, ye sab variety hai, aapko kaun sa chahiye? So he read, he said, ki I want this one. So he clicked that, and he said, how many cows you want to buy? He said 3. So the scale of finance for 1 cow was 60,000 rupees. So he says 3. So immediately 60 into 3, 1,80,000. And then in the meantime, his entire application was being processed. And then he said, told him, he said, look, you are buying 3 animals, 3 cows, this variety. The loan that you are taking is 1,80,000. And then the service charge is this much. It was very nominal amount. That also was shown. This is the service charge. That was also shown. So therefore, this much money is now being credited to your account, and so much is being deducted. I'm sorry, the service charge got deducted, not added. The service charge got deducted. So it was 1,79,000 something, which got credited to his account. So he then clicked. Within a few seconds, this guy, this milk producer got a message on his mobile phone. He checked up, the amount had been sanctioned, it had been credited to his bank account, and he gets a message, rupees 1,79,000 something, about let's say rupees 1,80,000 credited to your bank account. Now he saw it and he could not believe that something like that is happening. Now what does this achieve? What does this achieve? It achieves that it will lead eventually to credit penetration to the bottom of the pyramid. It will ensure that the milk producer or the farmer, particularly the small and marginal farmer, doesn't have to make innumerable or multiple visits, not innumerable, but multiple visits to the bank. At least 3-4 times he has to go. Sometimes some records have to be produced, sometimes some records are incomplete, then he has to produce some certificate from the revenue office. So therefore all that details has been cut out, and every day he goes to the bank, he spends at least half a day going, coming and waiting there. So that time is also saved. So the access to credit becomes much easier, and we have now launched on 17th of August a digital platform. We have launched a digital platform, a technological platform for frictionless credit, and we are targeting, it's on a pilot mode now. It will be, the full rollout will be, because from the pilot there will be many learnings and there will be many experiences. So based on that, there will be a full rollout later on. But in this pilot project which we have launched for frictionless credit, our target is to reach, to cater to the retail loans and to the loans to the MSCs, that is to the small SMEs, the small and medium enterprises. So this is the kind of things which technology can do, and just imagine the potential for growth, the potential for creating employment which all these technologies have. And in this context, not only the harnessing of modern technology, but also I think innovation and startups have a major role. The recent breakthrough in artificial, and this is something which not only the big companies but also small entrepreneurs not only can achieve, but they are achieving. The recent breakthrough in artificial intelligence, not by a big tech company but by a startup, that is the OpenAI, speaks volumes about the power of startups in ushering in technology-driven economic prosperity. The startup investment outlook in India remains positive. It's encouraging that many startups are focused on small and medium businesses, financial inclusion, access to affordable healthcare, better education and higher earnings as their core value proposition. The time is now ripe for targeted development of startups in high-end, in high-tech domains such as quantum computing, smaller modular reactors, AI-based defense equipment, biotechnology, rare earths extraction, battery technology, oceanography and space exploration. Space exploration was here already. It's not that I saw our landing on the moon and added, it was there in my text. So you need not be skeptical about that. It has got tremendous potential. And the startup ecosystem that encompasses all this sector has been receiving a lot of support, and it needs to be promoted further to hasten the progress of the country. In conclusion, let me say that I have cut short a lot of the speech because I understand there would be maybe 1 or 2 questions, or I don't know. There will be some interaction, so I thought let me leave more time for that. And I'm sensitive to your time constraints also. So let me now conclude by saying that as India's growth narrative changes from caution and watchfulness to optimism and exuberance, it's now India's time to make a mark in the emerging global economic landscape. A recent media article aptly captures India's potential in an article titled, "The Global Economy Needs a New Powerhouse. India is Stepping Up." The need of the hour is to make concerted efforts in the areas outlined in my speech today, and also a few other areas to lay the foundations of this new powerhouse, that is India, which is destined to grow in size, confidence and inclusiveness. Thank you very much.
Thank you, Governor, for expounding so brilliantly your vision and strategy for attaining a sustainable future, which is critical not only for India but also for the world at large.